Look at your money here on Good Morning Quad Cities. It was a rough past week for investors. On Friday, the benchmark S&P 500 stock index fell for the sixth consecutive day. It's the longest losing streak since October. And for the week, the S&P 500 fell 3.1%, while the tech-heavy NASDAQ declined by 5.5%. Joining us now to talk more about this is financial advisor Mark Gravicheski. Good morning, Mark. Thank you so much for joining us.
Yeah, morning to you, David. Great to see you again. Happy Monday.
Yeah, happy Monday to you. I'm curious to know, what do you think is driving the recent sell-off in the stock market?
First off, David, on the positive side, a little bit of good news. Looking at some of the pre-market indicators here, Wall Street is set to open up a little bit higher, but we'll see how things pan out over the next couple of hours. But to your point, for much of the past 12 months, we've seen this steady rise in the stock market driven by Wall Street's energy and excitement over artificial intelligence. But every few months we see this volatility and choppiness in the stock market whenever the latest data shows that inflation still remains a significant problem. And that's kind of what we're seeing now. 2 weeks ago, inflation jumped from 3.2 up to 3.5%, a 6-month high. Then this past Tuesday, Federal Reserve Chairman Jerome Powell admitted that this inflation problem likely isn't going away anytime soon. And so this means that the Fed will likely have to keep interest rates higher for longer. And when you look back at history, David, the longer you have high inflation, the longer you have high interest rates, the greater the risk to the U.S. economy. And that apprehension is reflected in these bouts of volatility we're seeing every so often in the stock market.
Okay, so does this recent volatility in any way change your long-term view of the stock market?
In the longer term, David, I still remain quite bullish and optimistic in the U.S. stock market. Look, I think at the heart of this broader stock market rally is Wall Street's fascination and excitement over artificial intelligence. Wall Street views AI as a truly historic moment of groundbreaking innovation that will impact economies and societies for generations. But that said, in the shorter term, and that's kind of what we're seeing, there are a lot of anxieties that's leaving Wall Street a little bit skittish. Again, high inflation, high interest rates. We're seeing more and more conflict in the Middle East, and oh, by the way, there's a presidential election in less than 6 months.
Right, and one of the challenges, though, that we talked about this morning are those high interest rates. So,
Yeah.
Do you think that we're going to start seeing those decline anytime soon?
Well, remember, it was the Federal Reserve that started raising interest rates in the first place to try to get this inflation under control. But if the Federal Reserve starts lowering interest rates too soon, it risks reigniting inflation even higher. And here's what I mean. When the Federal Reserve lowers interest rates, it makes it cheaper and easier to buy goods and services on credit. And this fuels consumer spending, David, and creates this upward pressure on prices, which is the last thing the Federal Reserve wants to do. And we saw something very similar, kind of for you Fed historians. I know there's a few of you out there. We saw something very similar in the mid-1970s, early 80s. At the time, inflation had fallen from 12% down to about 5%. And unfortunately, the Federal Reserve prematurely declared victory over inflation and started lowering interest rates. And sure enough, that reignited inflation, which then surged to over 14%. And the Federal Reserve wants to avoid a repeat of that same disaster. Now, back in February, there was some hope that the Federal Reserve would soon start to lower interest rates this year in 2024. But if inflation remains stubbornly high, and again, that's kind of what we're seeing over the past few months, that timeline for when the Federal Reserve can start lowering interest rates might very well get pushed into 2025.
All right, Mark, thank you so much for your excellent expertise as always, and we'll see you again next Monday.
All right, enjoy your day, David.
You too, thank you.